السلام عليكم. Good day, everyone. Thank you for attending BankDhofar session, discussion session. This session is scheduled for 1 hour. We are going to divide this session in two parts. First part will be at the presentation, at the financial results for the year ended 2023 presentation, and the second part for the Q&A. So I appreciate to note down your questions for the second part. Now I will hand over the speech to our CEO, Mr. Abdul Hakim Omar Al-Ujaid.
Assalamu alaikum wa sallallahu مساء. Good evening after everyone. Good afternoon. Ramadan Mubarak to all of you, and wish you Ramadan Kareem for the rest of the days left. I would like to welcome you all to the MSX discussions session, where we will discuss the financial performance of BankDhofar for the year ending 2023. Joining me today in our meeting is the Deputy Chief Executive Officer, Mr. Buba Kumar, and our Chief Islamic Officer, Mr. Kamal, and our Chief Financial Officer, Mr. Bikesh, Head of Investor Relations, Mr. Hilal, and our Investment Relation team, Maram and Sundus. We are also delighted today to have on our MSX call students from CBFS, University of Sharqiya, Nizwa University, and German University of Technology as part of the student engagement and financial knowledge awareness session. Hope the students will find this session practical and useful for them. During the year, Oman's economy demonstrated positive macroeconomic growth, and we have seen this getting reflected in the upgrade of Oman's credit rating, whilst maintaining a positive outlook reflecting the improved physical health of economy that results from the focused effort of the government. Our bank continues to contribute to Oman Vision 2040 by providing services to projects of national interest. The bank continues to focus on business opportunities through expansions of branch network, which has now reached 125 branches as at the end of March 2024, 108 at December 2023, combined with expansion of our digital channels. We have also significantly increased our ATM and CDM across the country. We currently have nearly 350 machines and expanding further in the future. We have expanded our customer base to over 533,000 customers. BankDhofar network of branches is the second largest in Oman. We have opened 43 branches new in the year 2023, which is an unprecedented achievement in the banking industry in Oman. This is a mixture of both conventional and Islamic branches across the country. During this year, we have also launched a Riyada and a Rifa customer segments, and also revamped our ladies banking proposition. We have established a corporate advisory, asset management, and private banking. We have rebranded Islamic Window Maysara to BankDhofar Islamic this year, and this has been well received by the customers. We delivered a good financial performance during the year 2023, and our net profit stood at 38.7 million. That is an increase of 13.4% over the last year. The bank has declared a dividend of 7.75% for the year ended 2023 compared to 5% last year. I will now pass the microphone to the Chief Executive Officer, Chief Financial Officer, Mr. Bikesh, to take us through the investor presentations and discussion of our financial performance details. Vikesh.
Thank you, Mr. Abdul Hakim, and good afternoon, everybody, and welcome on a call today to discuss the financial performance of BankDhofar as at the end of December 2023. A quick disclaimer: we will be avoiding forward-looking statements. So, with that, I will immediately move on to our investors' presentation and take you through the same. If you move on, please. Slide more.
Yeah.
Sorry, a little bit of technical glitch. Okay, quick look at BankDhofar as at the end of December 2023. Our total income stood at 144.08 million, an increase of 0.65% as compared to last year at 143 million. Net profit stood at 38.76 million, an increase of 13.42% as compared to the same period 2022. Our net interest margins stood at 2.08%, a reduction of 43 basis points as compared to 2.51% for the previous year. And I've got a separate slide wherein which I'll be covering through the details of drop in our net interest margins. Our return on assets stood at 0.86%, which is an increase of 8 basis points year on year. Our return on shareholders' equity, which is core equity, stood at 6.9%, which is an increase of 71 basis points. And should that be adjusted for the 81 coupon, the return on equity stood at 5.4%. Our net loans and advances and financing to customers at 3.77 billion, an increase of almost 9.8%. Deposits at 3.3 billion, an increase of 14%, and our total assets stood at 4.69 billion. Our cost-to-income ratio at 47.64% was lower by 103 basis points as compared to last year. Our ECL coverage at 95.42%, and our capital adequacy stood at 17.48%, a reduction of 1.42% as compared to the same period last year. We have 13 nationalities of full-time employees working for the bank, of which 44% of employees are women. As Mr. Abdul Hakim mentioned, we have one of the fastest growing branch network in Oman. As at the end of December 2023, we stood at 108 branches and expected to be 125 branches by the end of this month. We are rated by both Moody's and Fitch at BA1 with a stable outlook. And as far as Fitch is concerned, it's BB plus with a stable outlook. As briefly mentioned in the opening remarks of the CEO, we have the fastest growing branch network in Oman with 108 branches as at the end of December, of which 86 were conventional and 22 were Islamic. In addition to our branch network, we also continue to expand our ATM CDM network as well. ATM stood at 190, CDM at 84, our fully functional machines at 40, and multifunctional kiosks at 4. In fact, as at the end of March, it is expected to be close to almost 350 machines. Our market share with assets at 13%, loans and deposits at 13 and 12% respectively. We crossed almost 500,000 customers as at the end of December 2023, and now stand at 533,000 customers as at the end of December. With 43 branches that got added during the year 2023, this was again one of the fastest growing network of branches ever in Oman, with conventional 31 branches and Dhofar Islamic 12 branches that got added in during the year. Next slide shows a quick snapshot of our balance sheet on the top left with income statement and some of the key ratios. I touched upon our loans and advances, which increased by 9.8% to 3.766 billion, an increase of 336 million during the year. Customer deposits during the same period went up by 14.1%, an increase of almost 407 million. If I look at the income statement, our operating income stood at 144 million, with expenses at 69 million, which was a shade below last year at 70 million, and our impairments at 32 million, giving me a net profit of 38.7, 39 million as at the end of December 2023. Our capital adequacy ratio at 17.48% was lower as compared to last year, mainly because of the increase in overall risk-weighted assets and the increase in loans and advances. Our CET1 ratio is at 12.99% as compared to the regulatory requirement of 8.25%. Our NPL ratio stood at 5.39% as compared to 5.87% last year, which is a reduction of 50 basis points. Margins are touched upon, a reduction of 47 basis points as compared to last year. The last line, which shows the fee income to operating income, which again was a very good story for BankDhofar, wherein which we used to have a fee to total income ratio of 14.49% last year. This has now improved to 23.09% as at the end of December 2023. And we've seen a fee increase across all our businesses and products. And again, I have a separate slide where I'll be taking you through the details of our fee income increase. This slide shows the trajectory of our profitability, total income, operating income over the last 10 years. Essentially, the right-hand side is where 2023 performance is shown, with 144 million being the highest total income ever recorded in BankDhofar's history, with 75 million being the operating profit, again, the highest ever over the last 10 years and since inception 1990. Next slide shows our shareholder structure on the top of the slide, and the asset composition as well as the operating income split at the bottom of the slide. We continue to be owned to the extent of 25% by pension funds, giving us a strong, sticky relationship with GREs as well as sovereign entities. The total asset segmental split as shown on the bottom left, with corporate banking at 43%, retail banking at 26%, treasury and financial institutions at 13%, and Dhofar Islamic at 18%. The operating income pretty much mirrors the asset segmental split, with corporate banking at 45%, retail at 28%, treasury and financial institutions at 11%, and Dhofar Islamic at 16%. This is the historic evolvement of BankDhofar since its operations started in 1991. At the extreme right, 2023, some of the key achievements: we rolled out our 5-year macro strategy in 2022. We refinanced our 40 million Tier 1 issue successfully in the year 2023, and continue to expand our branch network, which stood at 108 branches as at the end of December 2023. Some of the key credit strengths of BankDhofar: we are a leading franchise in Oman, which offering diversified products across all our businesses, retail, corporate, Islamic, treasury, and financial institutions. We are one of the fastest growing Islamic bank windows in Oman. By virtue of our ownership, with 25% being owned by pension funds, we enjoy a very good and sticky relationship with government as well as quasi-sovereign entities. We are operating out of a stable and growing operating environment in the country. We enjoy a solid and robust capitalization, as I mentioned, 17.48% being our total capital adequacy ratio, as compared to or as against 12.25%, which is the minimum that is required by the regulator. We continue to expand our digital as well as branch footprint, with 108 branches and almost 350 ATMs, CDMs, and other multifunctional kiosks. Next slide gives a brief overview of Sultanate of Oman. We are the second largest country in GCC, as you know, enjoying a stable political system with population of 5.2 million, enjoying a resilient and solid economy. The graph on the bottom left shows the real GDP growth which was a negative of 2.8% as COVID hit, which has since then improved to 2.3% as at the end of 2023 and expected to further improve to 2.9% as at the end of 2024. Looking at the banking sector in Oman, we have 20 licensed banks, 15 of which are conventional commercial banks, 2 state-owned specialized banks, and 2 full-fledged locally incorporated Islamic banks. The graph on the bottom left shows the asset, deposit, and loan composition at the banking industry level, with our assets at 42 billion, loans at 30, and deposits at 29 billion. The graph on the bottom right shows the Islamic banking asset trajectory over the last 5 years, with the assets growing at a CAGR of 8.5% and at 7.35 billion as at the end of 2023. This slide, which is slide number 13, summarizes our strategy, essentially shows our purpose and the key strategic pillars, with customer being at the center of our strategic pillars. Essentially, our strategic imperatives being we continue to enhance our digital channels as well as through digital engagement hub. Branch expansion has been one of the key strategic drive for the bank, predominantly focusing on a liability-led growth, CASA, as well as acquisition of customers. Customer acquisition, again, is at the heart of the strategy, and you can see that getting reflected into our overall customer numbers, which crossed 500,000 mark as at the end of December 2023. Operational excellence, process improvement, cost optimization is, again, a very important area for the bank, and that, again, is getting reflected through our cost-to-income ratio, which continues to decline and stood at 47.6% as at the end of December. The bank continues to invest in technology, risk management capabilities, information security to provide greater service offerings to our customers. We continue to look at new business opportunities. In fact, we have set up our investment banking, private banking, wealth management, and corporate advisory desks in the year 2023, which is expected to generate incremental business for the bank in the year 2024. Last but not the least, staff development training is again one of the key areas that the bank continues to focus on, both from a development as well as staff retention perspective. Moving on, digital banking, BankDhofar won the Best Digital Bank of the Year award by TAS Business Awards. We launched our multifunctional kiosks, which allows us to print statements, checkbooks, as well as debit cards right through the machines. Fintech partnerships with Thawani, OmPay, Telipay, etc., QTech during the year 2023. We launched a new soft POS for merchants, a new mobile banking app. We launched our WhatsApp services as well as digital onboarding through our digital channels. We are the first bank to introduce the RMV4, which is the cash recycling machines, which currently stands at 43 in number spread across Oman. We have set up a direct API integration with ICICI that allows our customers to seamlessly bank with both BankDhofar as well as ICICI at a click of a button. Enhanced card management services on digital banking, allowing the customers to set, reset debit and credit card pins. In addition to that, improved salary processing through B2B and digital banking channels is something that was introduced during the year 2023. Next slide shows the breakup of our net profits as well as the contribution of various business segments to the overall revenues. The retail banking net profit stood at 4.5 million, contributing almost 28% to the revenues. Our retail business serves 439,000 individual customers, offering various retail products through our priority banking, premium banking channels, which is Al Rifa and Al Riyada segment, which was introduced, as well as banking propositions for youth, ladies, as well as students. Corporate and wholesale banking at 16.7 million as at the end of December 2023 contributed 45% to the overall revenues of the bank, supports 26,000 wholesale and corporate banking clients, offering various tailor-made solutions to our customers. Government banking unit focused on deposit mobilization, working closely with sovereign as well as quasi-sovereign entities. Treasury and financial institutions contributed 10.1 million to the bottom line of the bank, with 11% to the overall revenues, managing funding, liquidity, interest rate, and exchange rate risks. Our treasury and financial institutions provide various products to the customers, which includes money market, currency swaps, interest rate swaps, options, commodities, and vanilla currency transactions. Our Islamic banking business generated a profit of 7.3 million, contributing 16% to the overall revenues, services 68,000 Islamic banking customers, offering Sharia-compliant financial services for all its businesses, including retail, corporate, treasury, and investment banking. Next slide details our profit and loss statement. As I just mentioned, our total income stood at 144 million as compared to 143 million last year. The chart that you see on the top left, which is number 1, is the net interest financing income, which declined from 122 million to 110 million. Now, the main reason for this decline was the interest margins that came down from 2.51% to 2.08%, a reduction of 43 basis points, which is what I mentioned right at the start of my presentation. Some of the key reasons for this decline, we have obviously seen a significant rate hikes. The Fed increased its interest rates with 11 rate hikes spread over a period of 18 months. That obviously led to a significant increase in the overall deposit rates within the country, given our peg to the US dollars. In addition to that, we also had a somewhat unique situation where we had some US dollar lending, which got prepaid at the start of 2023. To match this lending, we had some syndicated borrowings, which had a defined maturity. And that's the reason, since our asset got repaid, we were left with expensive syndicated borrowings with increasing Fed rates. That also led to a sharp reduction in our net interest margins during the year 2023. At the repricing maturity dates of the syndicated borrowings, which was January and February this year, we've been able to pay off these syndicated borrowings. So the net interest margin compression that we saw on account of our dollar borrowings, which got prepaid, is unlikely or not likely or will not recur in the year 2024. In addition to that, the bank continues to set aside provisions prudently, as well as classifying assets during the year 2023. That resulted in interest and suspense on some of our asset pool, also impacting our overall yields. So this was a combination of factors which led to a reduction of our net interest margins during the year 2023. Fee income, which is chart number 2, again, a fantastic story here. Our absolute numbers went up from 20 to 33 million, an increase of almost 60%. And as I mentioned, it came from across all businesses, predominantly our core fees, which includes fees from POS, FX, loans, commissions, guarantees, trade-related transaction, Islamic business, as well as FX income from treasury. Operating expenses, again, a good story with absolute cost coming down from 69 to 68 million, with various cost initiatives that the bank has undertaken, which is space optimization, efficiency on data lines, IT expenditure, and various contract negotiations with our vendors, etc. That led to a reduction of our overall cost during the year 2023. Net provisions at 31.66 million as compared to 33 million, so a decline of 4.82%. The bank continues to set aside provisions prudently for its exposures. In fact, our provisioning to operating profit ratio was 42% as compared to a market average of around 23-24%. Our cost of risk currently stands at 0.88%, which is a reduction of almost 10 basis points as compared to last year at 0.98%. Next slide, I'll quickly run through our Islamic banking numbers. The operating income went down marginally by 0.59%, again, mainly hit by the reduced margins, which was offset by the significant increase in the fee and other income that we saw on the Islamic business, as well. So fee income across both our conventional as well as Islamic banking business saw a significant increase, pretty much offsetting the reduced margins that we saw on our interest-funded business. Operating expenses, again, we continue to follow cost discipline, both on conventional as well as Islamic business, with overall costs on Islamic business coming down by 240,000. Our net profit after tax went up by 3.6% at 7.35 million, with financing growing by 21% at 686 million, and customer deposits at 564 million. Gross loans and advances, I touched upon this, went up by 323 million, an increase of almost 9%, again spread across various industry sectors, including retail, wholesale, communication and utilities, financial services, and the service industry. Credit quality, our NPL ratio, which was at 5.87% last year, came down to 5.39% as at the end of December 2023. We did take a write-off on one of the material large exposures that we had. So we fully provided the same, and the interest on which it was suspended, resulting in overall reduction that you've seen on my interest income, as well as reduction in my coverage ratio. Because of this write-off, wherein which we have to set aside 100% provision against the exposure, led to a reduced coverage ratio for the bank as compared to 2022. Having said, we continue to set aside provisions prudently and build on the same. Our stage 2 exposure and the coverage stood at 6.83% as compared to 8% last year. And our stage 3 coverage ratio, mainly because of this write-off, came down to 62.6% as at the end of December 2023. Next slide, which is slide number 20, touches upon our funding and liquidity. Again, here, it's a good story in the sense that our CASA, in terms of CASA to total deposit percent, CASA to total deposit stayed flattish at 45%, but the absolute amounts of CASA went up from 1.3 billion to 1.49 billion, an increase of almost 190 million. During the year, given the increase in interest rates, we have seen a customer behavior of moving towards term deposits. Having said, our increased branch network definitely helped build our CASA and maintain the CASA ratio, as well as build the overall CASA numbers by another 190 million during the year. Our LCR and NSFR continues to stay above the central bank regulatory requirement, which is at 146% and 108% respectively. Profitability and performance. This slide largely covers the fee income, which I touched upon in my previous slides. What you see on the top left is the composition of our profitability for NII, which is non-funded income, interest income for both conventional as well as Islamic banking and other income. As you can see, the fee to total income ratio, which was 14.49% last year, improved to 23.1% in the year 2023. Again, a 60% increase in absolute numbers. And what you see on the table, which is at the bottom left, shows the net fees and commission income. The first line, which is largely the core fee, that's where we have seen the growth coming from across all our businesses and products, where our core fee went from 14.8 million to 24.6 million, where other miscellaneous income largely staying flattish. Our FX and investment income from Treasury and Investment Bank also went up from 3.1 to almost 6.3 million during the year 2023. Cost, I have touched upon this. Cost to income ratio historically was upwards of 50%, peaked at 57.2% as at the end of 2021. Since then, various cost measures have been taken, whereby which we have seen a continued reduction in our cost to income ratio. Our cost to income ratio now stands at 47.6%, a reduction of 110 basis points. And if you see the graph on the bottom of the chart, that is the absolute cost numbers. And there also you can see over the last 3 years, the bank has managed to keep the cost flattish. In fact, the costs came down from 72 million in 2021 to 69 million in 2023 with various cost optimization initiatives that the bank has undertaken. In terms of yields, cost of funds, net interest margins, again, I've touched upon this. Asset yields went up from 5.54 to 6.17 on account of increased interest rates. However, it did not keep pace with the increase in cost of funds, mainly because of some of the accounts on which we had to suspend interest on. My cost of funds went up from 3.03% to 4.09%. This was a function of both the increase in deposit rates as well as the US dollar challenge that I talked about, which is behind us now, given we have paid out the syndicated borrowings both in January and February. Net interest margins as a result of our asset yield increasing by 63 and cost of funds going up by 106 stood at 2.08%, a reduction of 43 basis points during the year 2023. The bank continues to enjoy a robust capital position with our capital adequacy ratio at 17.48% as at the end of 2023, with CET ratio coming at 13%, which continues to be significantly higher than the regulatory requirement of 8.25 for CET1, as well as 12.25 for the total capital adequacy ratio. The chart on the bottom right shows the bank's dividend history. The bank has declared 7.75% dividend, which was briefly mentioned by our CEO, and which is higher as compared to last year when it was 5%. So that pretty much sums up my presentation. And in conclusion, some of the key stories that we would want to share with you is the fee and the other income, which is what we talked about in our previous calls, was one of the key focus areas for the bank, which has delivered a strong, in which we have delivered a strong performance with an increase of almost 60%. Our fee to income ratio, which was quite low as compared to our peers, is now at 23.1%. Our net profits went up by 13.4%. Cost to income ratio again continues to be a good story with cost management initiatives working for the bank, and cost to income ratio stood at 47.6%. The bank continues to focus on increasing its footprint with 108 branches as at the end of December and 125 as at the end of March. We continue to focus on improving our asset quality with prudent provision management. You would have seen our cost of risk, whilst it has come down to 88 cents, we continue to improve our coverage ratios. We are supported with an experienced management team, which is focused on driving performance. I think that's it from my side, and I will pass it back to Hilal for the Q&A session.
Mr. Rikesh. And now I will open the floor for the Q&A session. Kindly raise your hand and appreciate to switch on your camera and introduce yourself. Are there any questions? Okay, students want to ask a question.
We have some students who have joined the call this afternoon, and if you wish to ask any questions, please do raise your hands and identify yourself and go ahead. Good. I think with that, we will conclude our presentation. I'll just request.
Well, thank you, everyone. Oh, we have one.
We have one hand.
Please go ahead.
Yes, Faraz.
I am Felix El-Khabouria from CBFS. I've actually got a question regarding supporting small businesses. What services does BankDhofar offer to support these businesses?
Small business.
Small business.
Good. Yeah, but
So we have a few things that we do for the small businesses. One, because of the expansion of the network across the country, we are available in all places, in all wilaya of the country, and we are able to open an account for the customer there. And if the customer has any need for depositing money, doing transactions, and any of that, we are happy to do that. Whether if they want to process salaries for their customers, for their employees, they can use the bank for processing. Also, what we intend to do is we intend to come up with one or two specific products which will help the SME segment. And we're also planning to have sessions where if an SME wants to know something about accounting or marketing or any of those aspects, which is always important for an SME, we are happy to support that. Very recently, a few months back, the bank entered into an agreement with the tender board, where any of the freelancers who need any credit facilities for the home businesses or any of the businesses that they are doing, the bank would be happy to lend to that. That agreement was concluded a few months back. So these are the sort of the range of services that we currently provide to the SME segment. If any specific loan requirement is there, there is a separate analysis and a separate evaluation of that done for this purpose.
Thank you a lot.
Thank you.
Thank you, Philip. Are there any further questions?
Since there are no any further questions, I have to pass it back to our CEO for concluding the remarks.
thank you all for joining us this afternoon for this presentation, and wish you a happy Ramadan and a happy day.
Thank you.
Thank you. Thank you very much. Thank you.